All right, guys, good morning. This is 12 minutes past 12 midnight. I'm doing this recording from Abuja, Nigeria. Um, I want to welcome us back to another session of trade review on gold. Uh, those of us who have been following this trade review, you'll see that we have progressively been making some impact on our trade decision. We've been giving out very good and accurate signals and we'll continue to do that all for free. All right, so guys, let's hop into the business of today. We want to just review and let me give you my thought process of what I think gold is going to do in the coming hours, okay, of Friday, okay. All right, so now I've been able to mark up this chart, add additional structure, and here we have a a falling wedge. The market has been able to create a chart pattern here that is very, very instructive. And what that chart pattern tells me is that gold will continue to push to the upside. As I speak with you, the market has opened because this is 12 past 12 midnight. So Asian when the Sydney session, as it were, okay, and the Asia session I think will open by 1 a.m. GMT plus one. All right, so guys, that's my thought process that gold will continue to push up, okay? Now, if you see what is happening here, when price breaks this resistance of this chart pattern, okay, by then it will have moved into this channel structure, and it will push up to test this major structure level, okay? After that, I expect it to break this structure, retest it, and push to the upside, okay? Along the channel structure. All right, guys, along the channel structure. Okay, so we are going to see more push to the upside. Okay, so why is this so? If you look at what is happening with the dollar index, guys, dollar index is also pushing up. Okay, dollar index is pushing up, but if you look at the overall market structure of the dollar index, you see that the dollar index is what is bearish, and if the dollar index is bearish, gold should be bullish. All right. Now, the reason why this bullish push to the upside is happening is because in gold, if you look at the last couple of hours, you see that gold was selling massively, okay? Was selling not really massively, sluggishly as it were, sluggishly, because there are a lot of rejection patterns here with the candlesticks, okay? Showing massive bearish rejection, okay? So again, from the fundamental point of view, if you see what is happening if you guys see what is happening in Russia and Ukraine about the war, you see that there is backlash on the United States, okay, by some economies, okay, and so that resentment has caused the dollar to be massively selling off here, okay, massively selling off here, okay, but the dollar has suddenly regained some strength. How far this trend will go, I do not know. Okay, but let us see here. Okay, let's see what can possibly happen here. Okay, you can see that price is at Fibonacci 61.8. This pullback is there. Okay, anything could happen. Okay, if dollar continue to lose strength, okay, it will continue dropping. All right. So if you look at also what is happening in Israel, okay, and the Gaza Strip, you see that the war, that war as well, is affecting the greenback, okay, and the effect is showing on gold. The reason why gold is buying massively because gold is a safe haven currency, is a safe haven commodity, is a safe haven commodity. So most investors will put their money in gold, okay, and pull it out from the United States dollar investments, okay. All right, so that is all I have for you today. But as a bonus, I just want to show us some of the information you need to know when you're trading gold, okay? Now, the way gold moves in pip is different from the other currencies, okay? Or from the other instruments, okay? Now, gold, it's it's a commodity that is measured in points, okay? That is measured in points. But most traders are used to pips, all right? So just know that if your gold has moved 10 pips, it's equivalent to what? $1. If it has moved 100 pips, it's equivalent to $10. And if it has moved 1,000 pips, it's equivalent to what? It's equivalent to $100. Okay. All right. The other things you may need to know is that if you want to calculate your pips from the price point, you notice that if gold moves from 2020.00 up to 2030.00, this represents what? This represents 100 pips movement to the upside, okay? Because if you look at it on the before the decimal point, the difference is 10. So you have to add 0 or you multiply by 10 to give you the number of pips, okay? So the difference between this number and this number is 10. Okay, you multiply it by 10 to give you 100 pips, okay? If you're in my Telegram channel, you'll see where I did the arithmetic, simple arithmetic about how you can calculate the dollar value and the pip value for gold. Okay, so just go back to the Telegram channel if you're my students and refer to that document for additional information. Okay, so guys, that's all I have for us today on gold. So, but let's look at what Forex Factor is doing for tomorrow, being Friday. Okay. There are high impact news coming out tomorrow, being Friday. Let me just update this calendar. Let me refresh this calendar. The time is in sync with my computer time. Okay, so Friday, yes, there's high impact news coming out on Friday from 4 p.m. down to 8 p.m. These are all high impact news, guys. High impact news, guys. So we have to be very, very careful. Okay. I don't see us entering this market, tomorrow, or rather today. We're already in Friday. Because of all this high impact news, I'm going to wait. Okay, I'm going to wait. I'm going to wait. I'm not going to enter the market because the high impact news coming out tomorrow. I want to stay away from the market. I will wait for other opportunities. Okay. Then as soon as the news is over, the storm is over, we can begin to look for entry opportunities. Okay. So guys, that's how you trade the gold. Okay, and news highly impacts gold. So you don't trade when the news events coming out from the United States of America because the dollar is paired with gold in this instrument. So whatever happens to the greenback will affect this commodity pair. Okay. So that's why if you have high impact news coming out, you stay away from the market. Okay. It's safer to do that. All right, guys, that's all I have for you today. There isn't much. So the conclusion is fingers crossed. We expect price to push to the upside, breaking the structure. Okay, so around this area, in this area, I'll call it no man's land. Okay, until price approaches our structure level. Okay, um, maybe we might decide to do something different because if you see this this channel pattern, you notice that price has been respecting this channel pattern for a very long time. Okay, we can also take advantage of that to trade this commodity. If the price cruises above the channel, above this chart pattern, and pulls back slightly to retest it, we can take a buy. Okay, but all that will happen tomorrow when there is high impact news on gold. However, if you're able to find trade setup before the release of that news, if you're able to find how, if we're able to spot a setup before 4 p.m., we can still do something about it. If we can still enter a trade and make sure we close the trade before the release of this high impact news. Okay. So, guys, that's all I have for you on gold today, and I hope you enjoyed this video. If you did, just go to our YouTube channel and make some good top comments. Subscribe to the channel if you've not, and hit the notification bell so that when we release videos like this, you get notified. And please do like the channel, okay? So you can encourage me to do similar videos in the past, okay? Okay, in the future rather. Okay, thank you very much, guys. See you some other time. Bye bye.